All right, guys, here's another episode of the Corbin Claypool Show. Super excited to have a couple of my friends on and lenders, Ernesto with Apex Mortgage Group and David with Nexa Mortgage. So we're just going to talk about the market today, the industry, how crazy it's been over the last few years, and, you know, definitely talk about this dream program because I know David really wants to talk about that in detail. So call him if you have questions on it. No, I'm just kidding. But yeah, so let's get into it, guys. What? All right, hold on. We're restarting this.
Can we do that?
You can't do that.
That was a great intro. That would make me feel so much better if we could do that every once in a while. Just be like, hold on.
Yeah, hold on. Forget what I just said.
I was expecting one of you to be like, so, you know. No, I always mess up at least two intros before
go
I do
for it, bro.
Yeah, dude, go for it.
The ice. Mess up another couple times and then we'll be good.
And so let's get into it, guys. How has this year been so far?
Different. I would say. Yeah, different. It's been a little crazy. I think since January, it's just been super volatile. So, I mean, since 2022, I would say, but I think especially in 2023, it's been crazy.
I know we've been talking a little bit before this about how the industry has not been the same since 2020. You know, I got into this in like 2019, 2018. When did you get into it, David? Like 28?
So I got licensed at the very end of 2016. I started I would say I was a part-time lender. I think we could probably relate in that sense. The first year was like part-time in 2017. So I would say 2018 on, I was a full-time loan officer.
Okay, then what about you, Ernesto? When did you
start?
I
got in 2014. So okay. I started as a loan officer for Bank of America. I didn't even know it was real estate. I didn't call it real estate. I thought it was another sector of banking. So started there, got a rude awakening in what real estate actually is, real estate finance. And yeah, so since 2014. Get down camera.
Let's just keep this going. We'll just keep the podcast going.
Yes. Yeah, it's going to
Don't worry about the back right there.
We're good.
So in 2014, that's when you started. 2018 is when you started. I know in 2018 and 2019 it was a different market, but Ernesto, you have a little bit more experience than us as far as time. Has it always had these crazy fluctuations, or has it just been since 2020 that this has just been nuts?
Not at all that I've seen. Yeah. I think that there's obviously it always goes up and down and side to side. And I think since I've been, since 2014 and I've been in the industry, it's always kind of been like somewhat stable. It'll go up, but it'll take some time. It'll slowly gravitate that way. But to say that, and even when things started going crazy these past couple of years, what was crazy to me was just seeing how much of these up and down ticks that we would see, and they were so big. I remember thinking in my head, this happens once a year, twice a year, if that, or something crazy has to happen for that to happen. It'll happen like once or twice, and it was happening every day. So
yeah,
2020 on.
I remember that, dude, like point fluctuations. And I feel like that hasn't really changed. I mean, we're seeing that still in this market. We get down to the low sixes or high fives, and all of a sudden it goes back up into the high sixes overnight. My whole studio's falling apart as I do this podcast. Very similar to the mortgage industry. So it's par for the course. But yeah, go ahead. Sorry, I kind of interrupted you.
No, that's what I was saying. I was saying that like it was crazy to see that because I never seen that. It would take time for that to happen. And it would happen, not to say that. I think in 2018, we seen an uptick for a little while where we started seeing rates in the fives again. Mm-hmm. And that was kind of crazy. Yeah. I mean, I was so used to like fours somewhere.
4.875, 5.25. Yeah.
And people like to say, oh, well, my grandma said the rate was 16% back in the day when I bought a home. I'm like, that doesn't matter. Grandma also bought a home that was $40,000.
Yeah, 40, 50
when
grand.
Did you buy, right?
Exactly.
Like, yeah.
Right. So if we had a 16% rate at 400,000, it's literally unaffordable. You're not going to buy a home.
Yeah.
So the rates can't go up much more than they are at right now, in my opinion, or affordability is going to continue to come down. I actually literally had a nightmare about this last night. This is the kind of stuff I dream about, right? Is the rates going way up to like 10%. And I mean, what is that going to do to values? Well, it's hard to say because we still have very little supply and there's still good enough demand. So our value is going to stay the same. Or are they going to decrease a little bit? It's going to knock a lot of buyers out. So what do you kind of think about that, guys? Do you think rates are going to go up? Do you think rates are going to go down? What do you guys think?
Yeah, so I mean, I personally think it's so tough. Like, I just had a conversation. I was just having coffee with a friend of mine earlier, and she was asking me, she's like, "Is now a good time to buy?" And she said, "I'll be honest, like, I get annoyed by everybody in real estate saying, now, buy a house now, buy a house now." And it's in different markets, right?
Right.
When in 2019, they're shouting it's the time to buy, 2020, 21. Like, I feel like if you constantly are just telling people now you should buy a house, I mean, to a certain degree, depending on what their goals are long term and what their financial situation is, more often than not, I think it could make sense. But in terms of like gaming or planning where the market's going to exactly go rate wise, I just feel like I've seen so many people, myself included, being wrong over the last 2 years of guessing exactly, oh, it can't go past here, or it won't go this high. Watching the rates from the end of 21 at like 3.1, 3.25 go next year to like 4 almost, or 7.5, like 4.5 points up was crazy. That was an insane roller coaster up. And so I don't think anybody that I knew was projecting rates to get that high.
Yeah, no, I agree. And in 2022, like, it was busy for the first half. And then for me, at least,
September,
and I know it was kind of nationwide, man, because I see guys like Jeremy's production getting cut in half. And I'm like, if Jeremy's being cut in half, then everybody's being cut in half. And, we saw people's production drop from like July on, I think.
Oh, absolutely.
Including my own. And,
yeah.
And so, yeah, I mean, just a lot of fear and the psychology of buyers getting worried about the massive increases, which we've kind of seen that level off. And even though the rates are in the 6s, people are buying, people are still looking to buy. And to your point, I feel like now is always the time to buy, but constantly pushing that is not good. If you were to buy in 2018, you would have about 150 to 200, maybe more $1,000 in equity in your home and a hell of a good interest rate. If you buy now, you're going to be in the same position in 5-10 years from now. So like my client was looking at a payment yesterday. He's like, it's $4,300 a month for a $550,000 house. And that's super expensive. I'm like, dude, there's going to be an opportunity that you can refinance. You make great income. Just live this out for the next 5-10 years. And then you'll be able to take that money. If you want to buy something bigger, put a bigger down payment, lower your interest rate, lower your payment. I mean, there's options out there. So
I think to add on to when is it a good time to buy? Since I've been in real estate, it's never been a good time to buy, according to the media, according to what's being put out there.
Yes.
It's never been. You're 2015, right now we're looking in hindsight, it's like, 2015 prices and so on. And I remember at that time quoting, let's say $1,200, $1,300 payment. They're like, oh my God, that's so high. Right. $1,500 payment. Oh my God, that's so high. So it's just like, when is it? It's when you're ready. And I think that's what you want to look at: your financial situation, your employment, income stability, whether you do or don't have a down payment, what's available to you. And if that makes sense, then you're ready. Because you can never tell anybody when they're ready. Because I remember distinctly, I had a good friend of mine that I helped him purchase a home. And it was a $1,600 payment. And I remember he was like, it's a little steep. And I'm just like, well, look at it now, right?
Right.
So I think, in my opinion, it's when you are ready, because I don't think there's ever going to be a time when they're going to say buy. Because if that happens, then everybody's going to buy, and then prices are going to shoot up again, right? So yeah.
No, that's huge.
Yeah, I couldn't agree more. I think you said it perfectly. It's contextual for each person. I think the other thing too is it's very easy in America to pay attention to national news. And then when I talk to people, I'm like, well, look at Arizona, Texas, and Idaho. Their values have come down pretty decently in the last year or so. The rest of America, for the most part, the values are holding decently strong. And I think something that we benefit, like we've talked about this a lot, like we benefit somewhat for the microeconomy that is Fresno. A lot of agriculture. There's a lot of industry here that isn't quite as affected by certain economic changes that you might see globally or even nationally. And so it's very easy to get caught up in like global or national news, but you're not buying a house just in America, you're buying a house in Fresno, California, or a surrounding area. So I think you also got to do research for your local area and kind of what the market has been doing, what the trends are, because each market is not created equal either.
100%. And Fresno is special too, because people are moving in from these, Bay Area.
And I've seen that a lot.
Same.
A lot of people from like San Jose.
So you've had a good amount of people relocating as well.
A lot. I think San Jose was big here. I think a lot of these, you think about it like San Francisco, San Jose. I mean, there's only so much room in San Francisco. I mean, at the end, isn't it like almost landlocked to a certain extent with water?
Yeah.
I mean, it's just, you can only fit a certain amount of people. Then after that, it's like, there's not enough room. So then it's whoever can, and that's going to drive up prices, obviously.
And the affordability is shit.
It's
what,
terrible.
$1.2 million for a little tiny 1-bedroom, probably, or 2-bedroom. I'd like to look at that. It's just nuts.
It's super expensive.
You know, how can you raise a family on that?
Yeah,
you can't. And that's what a lot of people do in like San Diego and these other areas, is they go on with cousins and uncles,
multi-generational
multi-generational
households. That's what they do in these really expensive areas.
And I think the hub, which is the city center, it gets that bulk of the people, and as they can no longer do the middle piece of it, it starts extending out. And then as you get a certain amount out, it's like, okay, well, it's a commute now. Or if you can work from home, well, then what's the point? I no longer actually live in San Diego or San Francisco or whatever.
LA, yeah.
So then you're just like, hey, I don't need to be there physically. Fresno sounds pretty good, especially when you think about what price points are in comparison to there. And I mean, you can get yourself, you mentioned the 2-bedroom starter home for over $1 million in some of these cities. You could get something pretty nice here in Fresno. So the Central Valley is a little bit, I guess, unique in that sense. Because at the end of the day, it's still California, right? So it's like, I don't think if you're driven out of San Diego or LA, you're going to end up in, Idaho or something. I don't know. I don't know much about Idaho. I'm saying like you're going to go to the next spot that's available.
And I saw Joe Rogan on his podcast talking to somebody. I love the Joe Rogan podcast, and he was like, Fresno, it's a shithole. I was driving by and there's homeless people or whatever he said. Mm-hmm. And that is true. There are some really shitty parts of Fresno, but there are also some really nice parts. And it's a great place to raise a family. And we're only a couple hours away from the beach, right? We're
2-3 hours. Lakes within like an hour and 20 minutes. Yeah, there's a lot.
We're an hour and a half away from the mountains. Mm-hmm. I mean, people
you get up to Shaver Lake in an hour or so.
Yeah. And the mountains in the summer here are beautiful, and the winter, right? You can snowboard, you can ski. Mm-hmm. You're not that far away from Pismo. You're only 6 hours away from San Diego. Yeah. It's pretty far, but you can make that drive in a day.
But Fresno Airport is getting more, flights Southwest. They have direct flights to San Diego for it's 45 minutes to get there or to get to Portland. So I think Fresno is an up and coming city. I think if you look at us in the state, we're the 5th largest. Yeah. So if you compare us to the top 4 above us, or to Sacramento, because I lived there. I don't know if I know you lived out of town. You lived in San Diego. Have you lived out of Fresno?
Sanker.
We claim you still. Yeah. But Sacramento prices, their average home price is still significantly higher than Fresno. And they have the Delta Breeze, they got the Kings, they've got some cool things that we don't have yet. But when you compare the cost of San Jose or Sacramento or San Diego versus here, especially when you talk to out of town clients, for me, and I'm sure for you guys, that puts into perspective how still affordable Fresno is contextually. Yeah, compared to buying a house 8-10 years ago, it seems outrageous. But when you compare us to the rest of the state, we're still underpriced.
And people like to talk crap on California, and I know there's a lot of pieces that aren't great about
California. Wants to live here.
But everybody wants to live here, dude. And we have the best weather. We have the best beach. Maybe not the best beaches, but we have a lot of great things here in California that people take for granted, I think, and don't realize, moving to a place like Tennessee, which Tennessee's probably awesome.
Bugs, weather, humidity, tornadoes.
Yeah.
So tornadoes.
We don't have that. Yeah, I don't want tornadoes.
I'm good. Yeah. I'll take the rain that we've been getting recently.
Yeah. Yeah, we've been getting a lot of rain recently.
Yeah.
So, and I think David's super right to his point is as people move in from San Jose and continue to do this, the prices of homes are going to continue to go up. And we're going to end up like an LA County, unfortunately, I think, or like a San Fran as our population continues to grow and people are moving in here and new industries are coming in and things of that nature. Mm-hmm. It's going to be expensive as hell here because it's California at the end of the day. And we're just behind LA, LA 15, 20 years ago or whatever it is, they may have had prices where we're at, but where are we going to be in 15, 20 years? What are home prices going to do? So,
And I have seen buyers. I had a buyer a while back and he owned his first home, and I think it was a home in LA. I think I looked up the value. It was over $1 million. Mm-hmm. Payment was $800-900 a month. He bought it way back when. He's like, I'm never gonna sell that thing. It's in Studio City, so it's he's like, I'm never gonna sell that. That right there is just gold.
Yeah.
And so it's you think about that, and the people that are willing to sell that, we're talking about in those big cities, they sell it make $1 million plus or so, bring that over here, live good, you know, use half of it for a down, or buy an entire house with half of it, and you're good to go.
Or buy rental properties, cash, and all that kind
too,
of stuff. The one thing I do want to say though is, I'm not saying all of California is sunshines and rainbows, because in San Francisco and LA, I mean, there's literally an app to track people's shit on the street because people are shitting on the street disgusting. And there's needles and stuff. So I mean,
it is.
These areas, these highly certain areas are nasty, but Fresno is like a nice little hub where it has still pretty strong values and things of that nature. So yeah, it's a good spot to live. If you're going to move here, consider it.
Yeah.
You know?
Yeah. So I think you had asked a little while ago about like what my thoughts are with rates and where they're going to go. I mean, your guess is as good as mine, right? We don't know, but I think that, we just as a whole, right? Like we had, they went up obviously to slow things down a little bit. And I just think that there's so many people chomping at the bit, especially like, cause when, and I don't know what your experience was, and I'm talking about from just personal experience, not even from the data that's out there and all that stuff, is December, right? Like December of this past year, November, December, which seasonally, I guess we slowed down a little bit. But we were seeing a lot of seller credits. I mean, that 2-1 buy down became really, really big, where sellers were paying. I had several transactions where the seller was willing to pay the 2-1 buy down and the closing costs.
Yeah.
So, and I was seeing that like in November, December. Now, again, I think that had a little to do with it had a lot to do with high rates, coupled with, I think we're talking about just, I guess we were talking about the seasonality of just December being a little bit, you know, more calm that time of the year. And then we know that generally speaking, just in a normal market, you know, we go into January, February, March, we start getting a little bit of more of a home buying season. People come out of the woodwork, people come out of their caves, right? From the winter. Tax refunds, things like that, can use it towards down and things like that. So I think that we saw that, and then we had somewhat of a perfect storm going into January where rates kind of dropped. And I was like, how is this going to happen? Because going into 2023, what is like the move going to be? And I don't know if you remember January of 2022, the move was nuts. All of a sudden it was like, busy. Wow. And it was just crazy busy, and just rates were just,
well, the FOMO, I think, of the rates starting to rise, it caused anybody on the fence to just like, either they jumped off or they fully were like, I'm buying a house right now. That's what happened to me. That's why I bought in May of last year, because I saw rates trending. I was like, I won't be able to afford anything I like at the end of the year.
And I think you mentioned, well, we were talking about a little bit earlier about like the hangover of 2020, 2021, and then going into 2022. You had those buyers that were already approved and they were already excited about buying a home. So it's like, I'm already looking at houses. I mean, I still look at Zillow, but I would assume, I put myself in the buyer's shoes. And you know, they're looking at Zillow. They're looking at, okay, what am I approved for? I'm looking at Zillow. I'm looking at the homes that fall into my criteria, or into my price range. And you get excited and you start visualizing your family, and then you start visualizing, you know, your dog in the backyard and your kids running around and stuff like that.
Christmas, Thanksgiving, all that stuff.
Where's the Christmas tree going to go, right? Like you start getting that into your mind, that once you're at like, you know, talking about the high 2s, 3% range, and then you start seeing it slowly trickle upward, and you're just like, oh dang. So we did have those people that were like, okay, I was at a, you know, 2.9 or 3% interest rate pre-approval from the prior year, and now it's upticking. You're like March, April, and it's just like, oh dang, you know? And I think that excitement kind of kept you there. Once we hit a level, which I think we kind of hit it going into like July-ish, where it was kind of like, wait a minute, I don't know about all this, you know? And then it started becoming a little bit different. And then I think that the table started turning. We've seen a little bit of that, but that wasn't as much of it, because I don't think that uptick in the early 2022 really slowed people down. I
completely agree with you.
Yeah, no, it was still pretty busy at that time. And I think that we're through the worst of it too. You know, I think it's going to be a busy summertime. MBS Highway seems to think that our rates are going to come down when that May 10th report comes out. Inflation. You know, so we'll see what happens with that. But to kind of shift gears a little bit, let's get into this dream program.
Yeah, that's been huge.
I know David's pumped to talk about this.
So psyched.
Because I know we've all probably gotten about 50 freaking calls on this program from clients and agents and all that kind of stuff. So who wants to share on it? I mean, we can all kind of bounce stuff. Ernesto, I know you're doing research last night.
So I on Friday, I had a call with a rep about it because I wanted to learn. And she said, I was like, it's not even released yet. So we don't know some of the details. I think they didn't even know what the rate was going to be at the time. Yeah. And she said, but I'll give you enough information to make you dangerous over the weekend. So if it pops up, you know, I'll give you enough information for that. So, I mean, it's up to 20% down in down payment assistance, where they give you a silent second against the property, right?
And it covers the down and the closing cost.
Yeah.
So everything is covered.
Yeah. So
which is pretty nuts.
Or you can pay your own closing costs and use the full 20 to avoid the PMI.
Or get a seller credit or something. Sure. Yeah.
Right.
Yeah. And then,
dude, with a seller credit in this market,
killer. Yeah.
Yeah. And then I think the minimum loan to value is 70%. So you can even do 20% down, use the program, put 10% down of your own money, and now you have a 70% loan to value on that. So that was the first part of it. I don't know if you guys want to tag on to that one and start talking about.
No, yeah. I mean, the income limits, when it first came out, that was my biggest thing with it. I was like, oh, the income limits are going to be crap, right? With all these programs that come out for down payment assistance, it's like, you qualify for this, but you have to make less than $60,000 a year.
Yeah.
And it's like, okay, well, now less than $60,000 a year in Fresno, you qualify for a whopping $200,000.
Yeah.
You know?
Condo, maybe.
So, yeah.
The HOA is not too expensive.
Yeah, exactly. $250,000. And then when I started doing the research on this, and that's what I was looking about with the income limits, because the actual guidelines weren't really clear. They said, like, look at the average median of the home ready program. So I was like, okay, can we use the actual CalHFA limit? But we can actually use the full CalHFA income limit of, I think it's $159,000 a year, which is way above the average income and really puts people in a good spot to buy. Plus it's a conventional loan. So you're going to be seeing people, as we talked about before, buying $600,000, $700,000 homes with 20% down.
Yeah.
And I think it's actually a good program. I'm not a big fan of down payment assistance programs. I think a lot of them put people under the water. But this one, being that it's giving you so much, it's paying for your whole down payment and your closing costs. And, it's going to be a good spot that your monthly payment is actually still really low, and the interest rate's good on it too.
Yeah.
So David, I don't know if you want to add anything to it.
Yeah. I mean, I'd say I was very skeptical until there was more information that was released, because if it like sounds too good to be true, I'm just like, okay, where are the strings? Like, how is everything tied, tied together on the backside? It does, I would say, compared to a lot of the other programs that I've seen available in the last 2 to 3 years, I think it's better than most of those down payment assistance programs. I think the only thing that bothers me is I feel like, not trying to say any names of lenders, I don't think you guys are this way, but I think there's people in the market that it's like a nice shiny new product, and it's easy to try to pitch to clients without necessarily always going into all of the strings attached and everything on the back end.
Right.
Because each of the clients that I've talked to about it, and it's probably been like 3 or 4 in the last few days, when I explain to them all of the things that go into it, the fact that you have to pay back the down payment, the fact that any appreciation is going to be shared. If you want to try to refinance or sell or transfer title or do something like that with the house, your hands are kind of tied, and your financing opportunities on the other side could be, kind of hampered in a lot of ways. Right. As long as they know all of that and they're comfortable with it, I think it could be great, because obviously all that equity is going to help make it a lot more affordable of a payment. The rate that they're offering with it is pretty in line with, I think, like a decently fair interest rate for a similar product that's not down payment assistance. So I would say, honestly, I like it better than more down payment, the other down payment assistance that are out there. I just would really want to make sure that anybody that's doing it fully gets everything that is going to affect them and what it looks like 2 to 3, 4, 5 years down the road if they want to do something different with that home.
I love it. And so it's 20% of the appreciation of the property that they keep, right? So they're keeping 80% of it.
Yes.
So that's still pretty good.
That's still pretty good.
But when they have to pay back 20% down and a little bit of an uncertain market, I think what California is seeing is the fact that we have no supply. Mm-hmm. So home prices are still going to stay stagnant, or they're going to continue to go up over the next 5-6 years. Because I don't think anybody in their right mind would give a bunch of people $300 million worth of people 20% down if they thought the home prices were going to collapse, because that would be tragic. I mean, it'd be really bad for the people that were buying with a second lien that was 20% down. I mean, a lot of them would be short selling and foreclosing. There's no way they'd be able to afford it. So those are some downsides to it.
But I completely agree with you on that. Is why would you give $300 million if you thought that the market was going to crash? You know what I mean? Right. Or you thought that that prices were going to go down. I just don't see that being a reality. And I think there's some smart people that put it together, right? This time around, because I think that last one, which was a year ago, the equity builder, which that's the one that we were referring to a little bit ago.
Nobody did that one.
Because you couldn't qualify for anything on it. Like it had such strict limits on everything that it was like, okay, cool. If you actually can and actually find a home, especially in a market that we were in when people were offering overvalue and doing appraisal gaps and things like that, I just didn't see that really being, something that was really going to do some damage.
Let's talk about that though. Why would they put a program like this in? Why would they put something like to stimulate? Do they feel like they need to stimulate the real estate economy here because they feel like it's slow? What are they trying to do? That's what I want to know.
That's the thing, because I don't think it's slow. I mean,
statistically, it's slower than it has been, right?
Yeah.
It's down. Real estate sales are down like 70 to 80% from a year and a half to 2 years ago. So it's definitely slower, but good.
No. I was just going to say,
I know with us, like we're still busy, right? Because we have good reputations. We work really hard. So we're still doing business, but overall the big scheme of things, the pool has gotten like this big.
Oh yeah, of course. And I think it was just because like we were talking about a little bit ago with the lever that the Federal Reserve is trying to do with trying to get inflation to tame and calm this down. Because at one point when rates were super low, I mean, you guys remember, we all remember it. It was crazy. It was like, no contingencies, no appraisal contingency, or they would offer up to, $30K over appraised value. You're right there, over appraised value, and just guarantee it. And that right there, in and of itself, was driving up prices, right? So when we started seeing this increase in rates, it's gonna calm some people down. Now we got to that. I mean, I've seen fives. I've seen low fives. I mean, 9 years. Like I've seen fives. I've never seen sixes or sevens. I mean, not like in like a non-QM loan or really bad credit situations, possibly, but like I've never seen sixes or sevens. So
I want to comment on that real quick. I feel like 5% mortgage rates are perfect.
Agreed.
Like,
I think that's where we find our.
So like, if you're in the sixes, you have shit credit. Like that's where I feel like is the perfect demand. Like you're going to have a lot of demand, but you're not going to have too much, right?
Yeah.
The affordability is still there, and there's not this huge payment shock and interest rate factor.
Yeah.
So if we can get down into the fives this year, we're going to be busy, dude. Very busy.
And that's what I think happened in 2023, and I think, or 2022, I'm sorry. I heard Barry Habib say it, or Dan Habib, I think. They were talking about how like when you get up in the morning, right, and you hop in the shower, and it's super cold, you're like freezing, so you put it in hot, like right away. And then it gets steaming hot, and then you try to slow it down to get to where it's right. And I think that's what the Federal Reserve did with rates.
Yeah,
right.
They just went all the way to the top, try to see until it breaks, and they're like, okay, now we got to calm down. And we're kind of seeing that now, I think. And I think we've gotten to where we're trying to figure it out right now. Now we're trying to like, make it a little bit hotter, a little bit colder, to try to like tweak things a little bit to find where we need to sit.
Well, the recent bank collapse too, they're definitely going to be slowing stuff down, So because they were saying they wanted to hike a point again, right? And then after that bank collapse, they're like, whoa, maybe we'll just do 25 basis points for now and see how things are. And I think once we start seeing these updated inflation reports come out, we're going to see it a lot lower. And so maybe they don't have the need to continue to up it. Who knows? I don't know. I'm not an economist, but
you're neither of those things.
Yeah, exactly. So. Yeah, if we kind of change gears here, I want to talk a little bit about, so you guys are both very successful in the industry, and I want to talk, like, I think we all have different marketing strategies and tactics, and I think that this could be beneficial to people watching about how to grow their business if they're a new loan officer, what they can do to deliver the best service. And so let's kind of get into it a little bit. I think it'll be interesting because I know we all have different ways of going about it, man. Like, David, what is your marketing strategy?
Fuck if I know. No, I'm just joking. My marketing strategy, I think, it's tough for me to say that that's an exact science. I think I'm much more of a kind of go with the flow kind of person. I think we've talked about that a lot of different times. I don't have an exact rhyme or reason to the way that I market. I really don't spend any money on marketing campaigns. It's really much more relational, I think, is how I've worked on building my business. And so I think I could do a better job at asking people for, business and referrals. That's something I think if you're on the spectrum, right? If you're talking about like hot and cold with the rates. I would say you could go all the way of being like all about your business all the time and only asking for business and making those, relationships just business. I think I probably lean a little bit more on the other side, maybe even a little bit past what's good for me. But in what sense? Maybe in terms of me making as much money as I possibly could, but I am enjoying kind of the flow of my life and how much business I have and who I work with. So for me personally, it's been about kind of going out. In the first few years, I really worked on meeting a lot of people in the industry, whether they were other lenders or they were realtors, just people in the industry, getting to know people and making connections. Because as much as it matters to have like realtor partners and marketing and people from your sphere of influence or that might know you that reach out to you for business, my argument is that knowing a lot of people in the industry and realtors, especially when times get tough, I can call realtors on listings, especially over the last few years. And I was like, hey, I know you can't legally tell me exactly where we're at, but if we were to put an offer in certain areas, like what might be a good chance? Like, what might help us? Or can you can you make sure that you at least point us in the right direction? I think that having those kind of connections, and even if they're not helping you point you in the right direction, they just know who you are and they trust that you can actually do what you say you're doing. They trust your pre-approval to actually be rooted in like a review and you're not just guessing. That goes a long ways. So I don't feel like I have the largest group of realtors that I work with or that I market to, but I think by making, good relationships and connections with people all over the market, that's kind of helped me have more successful offers. Maybe I don't have as many clients all the time, but I think my clients have a really good chance of getting their offers accepted because I've built a reputation for myself and how my business is run in the Fresno community. And I think we would all agree, it's a very small community. Absolutely. Your reputation in Fresno is so big. And if you don't really make an effort to maintain that reputation and have it be worth something, your value as a loan officer and as a partner for your clients and realtors, I think becomes diminished.
100%. Absolutely. Yeah. If your follow through isn't good, like you're going to lose business. Go ahead.
Yeah. So, excuse me. Damn, I need some water. Excuse me.
What I like about this is people can see that different things work, right? There's a lot of coaching programs out there that are like, you need to do this, 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 and this. You need to do it this way. Coach, call, da, da, da. And the most successful people I know are just more so relationship based. They do have marketing. They do have other things that they do as well. But relationships are number one. Like you said, especially in Fresno, we're a tight knit community, man. Mm-hmm. We're small. We're a small, big town. Yeah. In my opinion, it's hard to break into the business here if, you're really not getting after it the first couple of years. So go ahead.
I think for me, I don't do very much marketing, which I've always said that's something that I should do. I really think that it adds a lot of value in putting yourself out there like that. But a lot of the way that I've grown my business, like similar to Dave's way of doing it, is I just try to do a good job, have solid approvals, foolproof, be available, be on it, be really good at how you explain it to the client, because then the client talks to the agent about you and says, hey, he was really thorough. He broke it all down to me. So what I found was I just try to do a really solid approval. I try to make it a smooth process, get the clients involved. And then I have a lot of where I've gotten a lot of realtors that work with me is on the listing side. They just saw that I did a great job, and
100%.
I don't know where I start getting, they're just like, hey, you closed, 1, 2, 3, 4 Main Street for me not too long ago. It was an excellent transaction. Would love to work with you again. I have, client, John Smith here, give him a call, and so on. So that's been kind of the way that I've been kind of working with it as far as growth.
And just making sure that you're doing an extremely good job on the deals that you do have. Yeah. Right. And I think there are people in this industry that just try to get as many deals as they can, and then they forget about the deals they have, and then those deals go sour or bad things happen and their reputation gets shot, and then it makes it harder to get your next one. And then your marketing efforts don't do as much because you've established this reputation that you're having issues in escrow and all this kind of stuff. So it's huge.
Yeah. And I've even told agents, I say, hey, let me review it, give it a solid review. And when you have that letter, take it and run with it. You're good. Cause I not too long ago, I had a realtor tell me, who said, hey, I was working with another agent prior to you, another loan officer prior to you. And I was driving this client everywhere, only to find out they were never approved. And they guaranteed it and so on and so forth. And I get it. There's things out of our control that might cause an issue. But if it's something that's within my realm, I've looked through it. So that's one way I would say, and just caring. I think that's one thing that has been kind of like a good thing and a bad thing at the same time, because it kind of causes a little bit of stress.
Yeah. Right.
But I just care, right? Like you care. I see clients and speak to them, and I just remind myself like they're a family. Like I remember, and when I bought my house in 2019, I did my own loan and I was stressed. I was just like, whoa. And you're thinking about, like we were talking about earlier, like imagining your family there and so on and so forth. And, I was like, hey, if I do this for a living and I'm like stressed, how do you think they feel? So I think it's having that empathy, and because you have that empathy, and when you come from that, I guess that angle of wanting to serve, wanting to help, and I guess do a great job so that you don't add on to that. Cause I've had people say, this is so stressful. And I'm like, I'm going to be here holding your hand the whole time. Like, don't worry about it. I got you. If you need anything, let me know. It's not that, I mean, it's stressful for you, but I do this for a living, which it was stressful for me. Like I said a little bit ago, but I do this for a living, but like, so I got you. Like, don't worry about it. Like we're good. So, I think that goes a long way.
Yeah. I think telling people that is huge, you know, and Brian Minkow said something to me when I was at Homebridge that I never forgot. And he was like, doesn't matter who it is. Doesn't matter what they do, how much money they make, how much money they're putting down. They're always going to be worried that they can't qualify.
Yeah.
They're going to be worried that they're not going to qualify. Even a client that I'm working on today, her income is amazing. She's a correctional officer. She makes amazing income, and she was worried. And so I texted her, I said, you're qualified. Are you serious? I'm qualified? All excited, right? Yeah. And so it's like, yeah, of course you're qualified. You have amazing credit. You're putting a down payment. You have a great income. Like, you're going to qualify. But there's that fear in the back of people's heads, and I think that's part of our job, is to be like a therapist and help them out, right?
Absolutely.
Make sure they know.
Or I think just make it, just make it as smooth as you can, right? And then just try. If you care, they know, because things are going to happen regardless. And I don't think we can control everything, but if it happens and you kind of have their back and the agent's back, then it'll all work out.
Well, I think sometimes when things go wrong and you're like, you show like, okay, I care. You're not just like, okay, whatever, this is wrong. We're done. We're not going to keep trying. And like, you work your ass off to get the deal closed, and you go above and beyond, and you're calling the agent, telling them what's going on, calling the client, telling them what's going on, and you get it done. That's almost better than just a perfectly smooth transaction that goes through. They're like, wow, if I have a tough transaction, Ernesto's going to be there for me. David's going to be there for me. Corbin's going to be there for me to get it done and to get it to the finish line, you know?
Yeah, I was going to say, I just had a deal like that with a realtor that I've done a decent amount of transactions with. Shout out Genevieve. And the client she referred to me, I started working with in October or November. And just the way that the whole transaction worked, with her leaving her primary, retaining it, and buying another one, we went through 5 options to get her to the finish line. And I was like beating myself up, like, oh my God, you're an idiot. How did you miss that thing? Or how did that, like, and it was stuff that I was working with products I've never used before. And so it's like, how can you expect that you're going to get an A+ in a class or a test you've never taken before? So same thing there. I was like, okay, I'm just learning along the way. I was very honest and communicative the whole way. I didn't try to hide it. I was just like, hey, this happened. We got to go here. We got to go here. And at the end of the transaction, I was like, I'm pretty sure this realtor is not going to want to use me anymore. I'm pretty sure the client hates me. I just had like lunch with that client at a sandwich shop the other day. I ran into her. She, no animosity, so grateful that I put in that extra work. Same thing with the realtor. She's like, I know it was difficult, but you really came through. And I'm like, oh, okay, that's nice to hear. Because sometimes I think if you guys are like me, when things don't go great, we hold ourselves to the standard that we should always get it right. We shouldn't make any mistakes. It should be perfectly smooth. But really, when you push through and you get a deal closed that is challenging, I think it does, as long as you're communicating and you're not hiding things, I think it, for the most part, does build better trust with the client and with the realtor.
No, and it's almost always bigger in our head than it actually is.
Oh, and it gets worse when you let it sit and marinate.
That's what I was just going to say.
I can't sleep
it's the worst. I was gonna say, eat the toad first thing in the morning. And I tell my operations people this too, because, you know, I got a message today. We had this FEMA thing come out, which you guys may be seeing this. We got around it. We're post-funding all of them. But she texted me at 8 a.m. this morning. Do we have a solution yet? I'm like, it's 8 a.m., you know? But I almost appreciated it because it's like she's getting on it right then and there, eating the toad first thing in the morning. And we have 3 escrows that are supposed to fund over the next like 2 days. And that's what it kind of takes to just get through it and not be stressed out about it, right? So we ended up having a solution for it, but yeah.
And I agree with that. Like you kind of gotta, as long as you're communicative and like eat the toad or eat the frog or whatever it was, that solves everything. Because if you have an issue and you keep everybody in the dark about it, and then like a week passes, number one, you're not going to sleep at night, because it's happened to me early on in my career.
Oh, yeah.
It was just because you try to put it behind you.
Cannot avoid it.
I'll deal with it later, and then you do that, and then it just makes it so much harder. But then what I realize is that no matter how bad it is, as long as you just are like, hey, client, agent, and everybody involved, and you let them know what's going on and what you're doing to fix it, everybody's fine. I mean, you just let them know, even if there is an issue that can cause it.
I've noticed that if you're communicating and keeping everybody updated, you're fine.
Yeah.
It's when you go dark, right? It's when
That
it's
is like
to do that.
realtor and clients' worst nightmares, when it's like they can't get a hold of you.
Which is crazy. Like, how do you not answer your phone? That's just nuts to me, right? I mean, obviously we're going to be busy sometimes and we're going to have to call people back. But how do you not answer your phone or call people back?
I think it's fear. I mean, because we've all it is unbelievably scary sometimes, especially when you're new in the industry. It's very it's very scary. I remember shaking as I was like writing emails to like update escrow or be like, the appraisal's going to come back 2 days later, and then you learn like, hey, it's okay. Like it's not an exact this industry is not an exact science. It's not, it's these equations don't always perfectly balance out every single time. A 30-day escrow sometimes is a 15-day escrow, sometimes a 60-day escrow. There's so much that happens outside of our control. Right. And as long as you communicate and you keep, moving forward, it's not that bad.
Yeah. That's powerful.
Yeah, no, yeah, there it is, because there's so many different factors associated with it. Like people tell me like, okay, what is my exact cash to close? And I'm like, it doesn't work that way. Like I love that you guys laugh, because we all know it doesn't work that way. Like, okay, what is my exact cash to close? And I'm just like, well, it depends on when you actually get into escrow, when you purchase a home, because even when you're in escrow, you can't necessarily even do that, because some things may or may not apply.
Even when you get the CDL,
the last week, even it'll change.
The CD could even change and go down a little bit, right?
Yeah, you have to balance down to the penny. And that is even over. Yeah. So yeah.
And then depending on which day you close, if it goes farther in escrow, you pay
it's such a moving target.
Interest. Yeah, exactly. It is a moving target.
Yeah. So it's just setting that expectation and be like, hey, it's different here. And this is kind of what we got to look at, but I can't give you to the penny. Usually it's inflated a little bit, give them a little bit of wiggle room, a worst case scenario, things like that. But yeah.
So you started Apex Mortgage Group. Right?
Yeah, so it was myself and...
Did you know this, David?
No, I didn't know.
Brand new. So they're coming out actually just recently.
Congratulations.
Thank you. Appreciate it. Yeah. Yeah. I was with Snap Home Loans for about 5 years, I want to say.
Wow, bro, it was 5 years?
It's been about 4 or 5 years. Yeah. Was it 2018? Yeah, 2018. Yeah, something like that.
Is that when you left Homebridge?
Yeah, I went directly from there. That's where I met Corbin about 5 years ago. That's where. Yeah.
Do you remember doing videos in front of that horrible ass?
He would tell me, "Hey, bro, hold the camera,
in front of the whiteboard,
in front of that shitty ass black chalkboard that I painted.
Oh, yeah. I remember that. Yeah, you had a big whiteboard too,
and he had a suit on.
He always had a suit on.
Yeah.
Hey, suit helped me break in.
Hey, there you go.
It's all good, man. I used to. Yeah. So So we just kind of started this beginning of the year. It took a little bit of time. It's just now coming to fruition. But it's myself and partner Edgar Franco.
Yeah, love Edgar.
Local, Edgar. Yeah, he's a good guy. We just got it going. We actually just signed the lease to our office on Thursday. So
nice.
Where are you guys at? What side of town?
It's gonna be over that Palm in
real estate.
Yeah,
route.
the real estate area, general area. It'll be there. Okay. So so it's exciting. It'll be
nice,
fun.
man. And broker, right?
Yeah,
broker. So 2 brokers and a correspondent. Brokers are better, right?
We're all friends. Nah. You know what? I've been, I was at a bank. I was with the retail correspondent, or I don't know if you call it correspondent, but I was with Homebridge, Country Club Mortgage, a couple companies here in the area, and they were all great. I just think, and go ahead, sir.
I want to say one thing too, because there are retail companies where their rates are like way out of the ballpark. Right. And that's why I think broker's so powerful, because you get that control where your rates are really competitive, but with the right correspondent setup, like your rates are just as competitive. And I think Alameda has that, right? Yeah. Alameda's like a kind of parent owned company. Country Club Mortgage has that. Like these smaller companies that aren't these massive, huge companies have these deals that you can set up with a correspondent.
Yeah, a little more control. Yeah, I feel like it's just different strokes for different folks.
100%.
Yeah. And it was great when I was there. Country Club was amazing. Homebridge was awesome. You know, I met you, started working with Pablo and Mike Lowe and all them over there, and it was a great company to work with. I had originally worked with Snap before that around the time that I first left the bank. So I went back there. I had lunch with Tristan, decided to make the move over there at the time, and I think where I was at in my career at the time, it just worked. And I just haven't looked back ever since, and kind of kept it the same way up until, now we have this one going on. So
no, UWM changed the game for brokers.
Yeah.
100%. Right. Like, brokers were not good 6, 7, 8 years ago before UWM had their rise. And now that UWM's there, you have Rocket. Now you guys can get a loan done in 10 days, 15 days. Whereas before, like I know in my experience, sending a loan, I won't name any names, but other wholesale lenders, I'm like, shit, man. No communication taken.
They're so far back from each other. You talk about like, I used Rocket a lot last year. Now we're using UWM, but I use Rocket a lot. They were amazing to work with, super easy to work with, and they're very comparable to UWM and how they do things. And UWM is amazing as well. I mean, it's
like Coke and Pepsi. Would you say? Like
exactly. Right. Yeah, they're both super fast, super easy to work with. You know, and it's crazy to see, because I do use some other banks as well for different reasons and things like that. And as a broker, you kind of shop them and so on. But they're just on two different planets as far as like lending, and some of them are pretty good, right? They're pretty good. They're still good and everything. But when you go here, it's kind of hard. So, and it is a game changer, but,
it's like concierge VIP service, especially on the broker side. I feel like the tools that they have, that they've set, their whole system just flows so much easier.
Their technology is
worlds apart.
The technology is nuts.
I'll even say this, like we're using Encompass, and Encompass is good because we do everything in, but UWM's technology is next level.
It's incredible.
Like being able to draw your own CD, being able to draw your own docs, that people don't realize how crazy that is. Like that usually takes a staff of like 3-4 people in the doc department.
Or it takes 3-4 days usually too as well. Yeah, all the delays you get. You request a CD and 48 hours later, you're going to get that.
Yep,
it's like
1 or 2 business days, things like that. And this one's like right there. You do it yourself, which your processor does it. And it's a little, I just learned how to do it. I wanted to learn that piece of it. And at first I was like, what is going on here? I've never had to do this, but it's simple. I mean, once you get used to it, it's super easy. And it is a way to, it's UClose, right? UClose, I think we're at 3.0 or something like that.
Yeah.
I was only at 2.0.
Yeah, you were at 2.0. Now it's 3.0.
Is probably next level. Shit.
Yeah. Leveled up, Corbin.
I guess one more point. So.
Good stuff. So what is one thing that you would say to a newer loan officer getting into this industry right now? And what are your guys' projections over the next 6 months to a year as we wrap this thing up?
I would say personally, try to find someone to help mentor you. I think that's big. I think what was great for me when I first started it's now Alameda, but it was First Integrity, First Financial in 2017. I was really rolling there, and finding somewhere where you can really have questions that you can ask. Because on the broker side, if you were to just go straight into being a broker without structure, I think it would be very challenging.
You're lost.
And so I would say, I don't think you necessarily have to go the route of going to work at a major bank, Chase, Bank of America. Thankfully, Wells Fargo's out of the picture here locally, at least for now. I have no love lost with Wells Fargo. But I don't think you have to go work at a bank that has necessarily that much structure, but I think having a little more structure than a lot of broker offices, maybe corresponding even like you guys are, with a little bit more training, more people in the office where you can just walk outside your office and ask some questions. Right. That was really integral to me in the first 3 years, because it's hard to explain to people outside of the industry how many different variables there are amongst different loan types, right? And different clients. There's just so many questions you're going to have your first 2 or 3 years. If you don't have somewhere where you can easily access someone, especially face-to-face, I think that's very difficult in the first few years. So I would probably encourage someone to either work, closely with someone. Like you could work with a broker if you had a mentor there, but find someone that you can really go and learn from, like a trade. And then after that point, you'll have a much better idea and understanding of the market and where you might want to go and work. I don't think there's any one way you have to do it, but my biggest encouragement would be like, find someone who can help mentor you. And I know you're big on systems. I used to not be, and my production and my experience was so much up and down.
Yep.
Getting some consistency, getting some structure, being able to put systems in place with maybe your CRM or how you gather applications online. Like talk to somebody about how to streamline the process and lower the amount of hours you have to do on repeatable tasks. That's one of the big things that you really pushed for me that I was looking for. And when I came from the correspondent world to the broker world and was working with you in 2020, you were an open book for me. You're like, this is what I do here. This is what I do here. This is what I do here. And I was like, yes, 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 maybe no, but I borrowed and stole a lot of things that you were openly sharing with me, that at that time in my career were very, very applicable to what I needed to do to get my business where I wanted it to be. So I would say mentorship and some structure are the biggest things I would encourage.
100%. Just for one little easy one is just on your escrows, just set up touch points with your clients and realtors. I mean, once or twice a week, that's an easy one. Will make all the difference in the world as far as customer service and everything else. Ernesto, you're up.
The same. It's. I mean, at the end of the day, getting into lending, you're self-employed. You're a business, right? So like that's one thing that it took me a while to learn, and I'm just now figuring it out. Is the whole systems thing is treating it as a business, as opposed to you being a loan officer or a realtor. Even you are a business. So I think mentorship is huge because I mean, even me, I started in Bank of America, like I mentioned a while back, and I learned how to do loans, right? I just didn't know how to get them, right? Yeah. So I was in the bank and I had clients that would come in, and I learned through refinances, but then once I left that, I had no idea how to actually get loans in the door, right? And that was something that was learning experience, and I think that's where a good mentorship, because once you get them, now you have to learn how to do them, right? So that too doubles. But like you had mentioned, I think a mentor is huge. A mentor is huge. Going somewhere where you do have a little bit more structure. Broker world is a little bit more difficult when it comes to that. You kind of got to be a little bit more experienced, know how it works before going straight to there. I mean, if you do, then dang, good for you. But it is something that takes a little bit more I guess experience to do that. So a good mentor, treat it like a business. And that's what I'm learning right now. Using technology to your advantage. I mean, I used to take applications over the phone all the time, or in person. Oh, I remember in person. I remember originally when I was at Bank of America, what we would do is I would take the application and then we would mail them a packet, right? And I would tell them, you're going to get that in the mail in the next couple of days. It's going to get overnighted. Once you get that, call me and we'll schedule an appointment for you to come in. And we would literally go page by page and sign everything.
Inefficient.
Yeah. So it's super inefficient, right? But like leverage technology, learn technology. I think a game changer for me was FlowFi. That was, oh my God.
I love FlowFi.
I think you told me about FlowFi, and then
Simple Nexus is what I use now.
Yeah,
because it integrates with Encompass. It's so nice, dude. When we get an application, it automatically puts everything in.
Game changer. It's just huge. It makes it so much easier. It does things for you, does follow up, things like that. So leveraging technology, like you mentioned, a good mentor. That's huge, actually, man. I feel like I did a lot of self-figuring out, I guess you could say.
No, so did I. And there's a lot of people in this industry that don't teach on the sales aspects of it, which is crazy to me. Like they don't teach you how to go get business continually or to make the calls and this kind of stuff. They just don't do that. And
I think the thing that's difficult is I know now, you may have a team and things like that, but at the beginning you're doing it yourself, right? You're the one underwriting, or doing the pre-approval and pre-underwriting and doing all that stuff. So there's a sales aspect of it, and then there's also like a knowledge aspect of it, because there's so many nuances to getting pre-approved, whether it's something deep in the credit report or in the income and so on and so forth. There's so much, so you have to know how to sell, and you have to know how to, and I think I've heard it one time, I don't know who mentioned it, it's not so much selling, it's advising. I think if you come from that aspect of it,
as the professional,
the expert,
so and truly being the expert and knowing
truly being the expert, right? But I think being new, you're not exactly the expert at the beginning, but just having someone to go to guide you. Because I remember early on in my years, when I would do like auto loans and stuff like that, you put the information in there, you type it in, you
did
click,
auto loans too?
Yeah, well, I was a personal banker prior to getting into. I was with Bank of America. I was a personal banker prior to getting into loans, mortgage loans. So I remember doing auto loans, and you put the information in, credit cards, auto loans, and then you click enter, and it'll either spit an approval or you're going to get a letter in the mail in 7 to 10 business days letting you know if you're approved or not. So I thought mortgage was like that. So when I got in it, I was like, okay, and I didn't realize that, and I was like, what goes on here? What happens here? And then they're just like, oh, you have to look up the guidelines, and I'm like, wait, what? And like you had to and it's not just one thing; it's so much different areas. So yeah, it's just getting that knowledge, mentorship, all that other good stuff. I think you knocked it out.
What do you think is going to happen over the next 6 to 18 months, guys?
In a local perspective?
Area. I think so. I'll give you mine. I think rates are going to come down a little bit.
Okay.
I think that Barry Habib is going to be correct. I think that rates will come down. I don't think they're going to come down to 4s, but I think we're going to have low 6s, high 5s, and I think it will stay steady after that CPI report. And I think it's going to pick up crazy busy this summer. I don't think it's going to be 21 busy, but I think it's going to be a busy summer, and I think there's going to be multiple offers on homes. Like we're already seeing some homes on multiple offers. So I think that's what's going to happen in real estate in Fresno. So,
okay,
Yeah.
Okay, you go.
Yeah, you go.
No, I know. I just started talking. I want to say I agree with you. I agree with you. I think we're trying to figure out where we're going to be good. I think we've seen that. Where we are going to start calming things down because we're seeing it. I mean, we're talking about like the data is lagged, right? It's right. Over the past year or so that you're averaging it out. So it's a lot different than what we're actually seeing it now. And I think us being in the industry, we're boots on the ground. We're actually seeing what's really happening. Right. And it is crazy to see that. You're seeing, like we're talking about how it slowed down when rates, went to almost their peak in December. Rates dropped a little bit in January, February. We started seeing an uptick in buyers naturally, season, all that other good stuff. So I think that we will see that. And like you mentioned, that we're going to have to try to figure out where that water fits our shower, right? Like we were talking about earlier.
Yeah.
And that I think that will mean lower rates. Now, where they'll be, you were mentioning, I think somewhere in the 5s is healthy. I think that would be somewhere where it makes sense, right? You go a little too low, I think we're going to get too much.
We don't need to go too low.
Yeah, exactly.
As much as we would all love a refi boom and closing 50 freaking loans a month, we don't need that.
No, yeah.
We don't need that. The economy doesn't need it.
It wouldn't be held up for the market.
It would not, especially with our supply. How are we going to, how are we going to continue to do this if rates go down to 3s or 4s again, supply just takes a shit again. Prices. Like we're barely getting our supply back. We need a couple of years of just slower and steady, continual,
Yeah, and I think like Barry, right? What he said, he said the facts change, the data changes when the facts change, and I think as of now, based on the last, with Jerome Powell when he spoke. Mentioned how they were still going to raise 20. I think the reason why we're continuing that 25 basis points is because I just don't think that they want to completely take their foot off the gas pedal, because then we're just going to go in a completely different direction. And if that draws so much people out of the woodwork, we don't have enough supply, the demand is going to go through the roof, and then we're going to get back into this inflation issue. So I think they needed to continue that, hey, we're still going to go up 25 basis points. But as we all know, they weren't as hawkish about it. Their tone was a little bit more calm. We're going to see how it goes. Whereas before, like, no, we're going to go. And I think that's changing the atmosphere. And I really do think that inflation is actually coming down. So.
Yeah, I mean, I would kind of agree with you guys both. I think I've been telling people since maybe the end of the year or the beginning of this year that I would say sometime in the 12 to 24 month range, we're going to see rates come down a decent amount. That's what makes it kind of interesting when you're being in an advisor role. I'm sure you guys have lots of clients being like, no, really, what would you do? Would you buy down your rate? Would you use it for this? Right. And I'll just have to tell them straight up. I'm like, let's do the math. I don't usually like doing buy downs where your payback period is over 24 or 30 months. Like, I feel like that's a big commitment and that's a big bet. And I don't want the banks to win out on those, negotiations where you're trying to buy down your rate and then they end up profiting and you refinance before you see any savings. But I feel very similarly. I think that the values did not adjust quite as much, especially locally, as a lot of people thought. I think a lot of people were saying 5 to 10% maybe of a correction. I don't think we've seen that.
Let me ask you this. I want to kind of probe on that for a second, because when we actually look at the values, like let's say a house is selling for $300 and it goes for asking at $300. A lot of those $300,000 houses have a $20,000, $15,000, $10,000 seller credit on it. I don't think those are being factored into the appreciation data. I think if we actually factor all those seller credits in, I think we did have a small decline. I think that
I think in Fresno was like 3 to maybe 5% at most.
Is that with the seller credits being taken? That's what I'd be curious to see.
I'm not sure. That's a good question.
Or is it just the asking
That's actually a
price?
good question. Yeah,
it's a great question.
Is it just the asking price? Because I know a lot of sellers are doing the credits, but continue.
I'm not seeing that too much anymore.
Yeah, not as much anymore.
I think it's,
Yeah, so that is a great question. That'd honestly be something I think that would be worth looking into. But yeah, I do feel like we will see, I think the purpose of them raising the rates was to slow down the housing market.
Right.
Did it happen? Yeah, it slowed down. Like it definitely slowed down the housing market. We're not seeing home values increasing by $15,000, $20,000 a month because the house across the street got a $30,000 appraisal gap by the buyer, right? So we're not seeing that same like leapfrog of values. I feel like they've held fairly steady. And I mean, at the end of the day, people still need to buy houses for a whole host of reasons. Their kids need a different school. They need to upsize. They're tired of the house. Maybe they're getting married or they want to have kids and they're living in an apartment. I mean, there's a whole host of reasons that people might buy or sell a house. And I think the market matters, but people's lives are still going to kind of push what they end up choosing to do. So at the end of the day, the clients that I'm working with, I don't think they're desperate. I think they're much more taking their time to really look at what the options are available to them and look around at different houses and kind of shop. And I tell my clients, if you're not in a rush, that makes me happy. As much as it would be cool to pre-approve you and get paid on a loan within 40 days, if you take 90 days or 120 days, but you actually find a house you really love and you're not going to get buyer's remorse and not just buy something to buy something, it's likely you're going to be happy. And then even if I'm being selfish or greedy, if you're happy as a client, you'll probably use me again, or you'll probably refer friends or family to me. So at the end of the day, if you're in this for the long haul, I think the client's best interests are going to be what you put at the forefront of what you're advising them for, which I think all of us are, to where we're trying to be as honest as we can, try to be as educated as we can.
And that's why people use you, David, because you have that compassion towards people.
Yeah, I think all of us have that as well. I think we all do care. I appreciate that, but I think we all do care. And at the end of the day, I like seeing them take a little longer to make sure that they're buying a house that they really, really like. I did see some people in the last couple of years that maybe have a little buyer's remorse, or they really settled just because they were so scared of not getting a house. So I think this is a much healthier market, as much as it's uncomfortable for maybe buyers or, loan officers or realtors. I think this is much more healthy than what we saw the last couple years. It is definitely a huge adjustment. But nonetheless, I think this is healthier and more likely to lead to clients being happier long-term with the homes they buy.
And it's needed. We needed this. It kind of pushed out a lot of the people in the industry that weren't real serious. So
yeah, or weren't putting their clients' best interests at heart.
Exactly.
Yeah. Well, guys, thank you for coming on. This is fun. We'll do another Lender Roundtable. Get you guys some good content. And appreciate everybody watching, and see you guys on the next one.
Thanks for having us.
Thanks for having us. Yeah, for sure.